Okay.
Sir?
Yeah, 1 minute. I'm just collating some.
Yeah, and it's that is not working.
Yeah, good evening. See, you are able to see the screen, right?
Yes, sir.
Hello.
Yes, sir, we can see.
Okay. See, now we have completed with balance sheet part. Now we are starting with statement of profit and loss. Okay. If you see the heading here, name of the company, profit and loss statement for the year ended, and rupees in hundreds, thousands, whatever it is, we have to mention. Then same thing we are taking for 2 years. As per mandate, we have to give previous year figures also. So for P&L also it will continue. And as we told earlier that whatever denomination we are following, it is in hundreds or thousands, the same thing has to be followed throughout the financials. Now the format is like this, that revenue from operations, other income, total income, and then going to expenses, cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress, and stock in trade, employee benefits, finance cost, depreciation, amortization expense, other expense. This is one part, and here you get total expenses. So profit before exceptional and extraordinary items. Okay. Next, exceptional items, profit before extraordinary items and tax, extraordinary items. Then profit before tax. Then what is tax expense, current tax, deferred tax, profit for the period of continuing. See, here you have to. Okay, this is, I have just read the format because there is not much to explain there. Okay, here you have to be careful. See, this is what they are saying. Profit, till now they have not told anything about continuing operations. Okay. So you have to be careful here. They are saying that profit or loss for the period, okay, whatever period you have mentioned. If it is a year, it is for less than a year, less than a year. Okay, continuing operations only is coming here. Okay, then profit or loss from discontinuing operations is coming here. Tax expense of discontinuing operations, it is coming here. That means whatever you have reported, all the items above are of only continuing operations. See, if you ask me what is discontinuing operations, suppose there may be a situation where the company may sell off one of its process or one of its profit center. Like if suppose they have 3 products, they may sell off one product. Okay, manufacturing, selling of one product, they may sell off. Suppose if they have say 2 buildings where rental income is coming and they are selling one building, okay, then that becomes discontinuing operations. So this, even when we were discussing during balance sheet also, I have told that suppose if any company is selling, then we have to say that assets held for sale. Okay, same way you have to report if the company has entered into any agreement with any of the outside, if any other person to sell particular unit. Okay, then see, this we have discussed, if you remember, during going concern concept. Okay, so that if suppose today I'm entering into the agreement, it will not happen by 31st March, correct? Because it is just an understanding between both the companies, to one to sell and another one to buy. There will be due diligence, all verification, audit, everything will get over. Then they will file with NCLT. Okay, NCLT will call for meetings. Then creditors meetings will be there. Then when all lenders, like if there is any bank loan and all, they will also come and give their concurrence that yes, we are agreeing to the deal, like that. Then they will give some date that they will issue the order that you can sell this particular unit. Okay, all the terms and conditions will be mentioned, that from which date this will be effective. Okay, suppose today I am filing the application in NCLT, then I may file application today saying that from 1st April I want to sell, from 1st April 2023 I want to sell this particular unit to somebody. Okay, then the actual date of implementation will be, if NCLT agrees to it, okay, then all my financials have to be drawn from 1st April 2023 separately. But the order is not going to come today. If I'm making the application today, NCLT order may come after 1 year. Okay, till then, how will I prepare the financials? How will I disclose this to the outside world, insider, whoever is relying on my financials? So you have to, once you have agreed the deal, it is important for you to disclose what is the profit or loss from discontinuing operations, and what are the assets held for sale if if the unit is sold. Okay, that is the reason this is very important. So this disclosure comes as per accounting standard 28, that is impairment of assets. Okay, same way this in accounting standard 28, whatever they are saying has to be reported in respective notes to accounts also. Okay, I will show you one example also in this. Fine. So whatever you are reporting here above is of continuing operations. That is the reason here whatever profit they are saying is of continuing operations. Next, they are taking net of profit or loss from discontinuing operations. For discontinuing operations, you are not giving all these details. You are directly taking, okay, from continuing operations, I am getting this much profit, and from discontinuing operations, I am going to, actually, I am getting this much of profit. Why this is important is, suppose you are a shareholder. So you will think, by seeing their balance sheet, you will think, okay, that profit, if the deal is closed, NCLT, if it issues the order, then this particular amount will not be coming from next year. Okay, approximately, if the business continues as it is, this much amount profit will get reduced, like that. So tax expense on discontinuing operations, profit or loss from discontinuing after tax, then here profit or loss from the for the period. This is actually the total profit of the entity as of today, including discontinuing operations, because you are adding both the profits. Okay, because you have not yet sold it, you are going to sell it. If you have already sold it, then there is no question of word discontinuing. It is already discontinued. Okay, you understand this. This is why you are reporting here is that particular unit you have not yet sold. You are in the process of selling. That is the reason you are reporting it. Fine. Then basic and diluted earning per share. Okay. Now, these are all very common things which I will just go to our example balance sheet. There we will discuss few important points. Yeah, you are able to see the balance sheet, right? Word document. Yeah. See, now here we have revenue from operations, other income, same whatever we have seen. Whatever breakup they had given there, it is there in the schedules. Okay, net increase, decrease in inventory of project. Okay, I am not going to read this now. We have already seen the format there. Now I am going to these notes. Okay, these notes I am just going there. Yeah. You see here, revenue from operations, sale of developed land. By seeing this, I have not read their memorandum or articles of association. We can understand, as even a layman can understand, that sale of developed land means they are plotting and selling the property. Okay. Revenue from construction and sale of real estate. That means they are constructing some flats, okay, and selling those flats, or maybe commercial also. But it is as inventory, not as a fixed asset. Okay. Now coming to other operating revenue, infrastructure equipment charges. Okay, so if you had seen any infrastructure company, they will be collecting some infra charges, some lump sum amount. Okay, even if you have bought any house and all, you will know that they will charge some 1 lakh, 1 lakh 50, 2 lakhs per flat. They will charge that, they are taking it as income. Next, realization from cancellation of transfer of bookings. Okay, so if someone cancels the booking, then we know, even as per ERA, up to 2% of the property sale value we can collect as a cancellation charges. Okay, those charges they are taken so much during the year. Rental income from immobile property. Okay, so they had rented out some property from which they are generating rental income. Okay, this is not revenue from operations. Please note, it is other operating revenue. Why I am saying specifically this item? If you remember, when we have discussed entries, lease entries, investment property. Okay, in case of if they have held any property for the purpose of leasing, okay, then they should have shown it as investment property, right? But I don't see any investment property in their fixed assets. See, in their fixed asset, we had only one schedule of fixed asset, but actually as per format, if you remember, fixed asset schedule is different, investment property schedule is different, capital work in progress schedule is different, right? So there was only one schedule here, which we had seen, fixed asset. You see here, property, plant and equipment, intangible asset, non-current investments. There is no investment property here. Okay. If they had held this property for purpose of leasing, then this rental income would have become operating income, right? You understand? Please connect my earlier classes. That's what I'm trying to say. See, here we have fixed asset schedule, where it is property, plant and equipment, PPE only you see. Okay. And not investment, we don't have a subsequent investment property any schedule. That means whatever assets they had, they are using it for their own. Maybe there may be some temporary vacant space which they had let it out. That's why they are taking it as a other income and not as operating income. Okay, other operating revenue they have taken, not as a direct revenue from operations. Okay, suppose if they had investment property and their objective clause also says their main objective of the business is renting of spaces for commercial or whatever it is, then this income will become part of revenue from operations and not from other operating revenue. Okay, recoveries from customers, this is, say, it might be some additional work which they would have got it done. Okay, so they would charge any customization charges, something like that. It is not their main operation, but as a part of business, as a in the process of selling the units, they would have committed something and they would have got it done. So recoveries from customers, they would recover actual cost, additional cost. Recoveries from contractors also there, if there are any if there are any like damage, I mean the work is not completed properly and the customer is claiming some claim on the company, then they would have recovered it from the contractors. But I don't know why they have shown it under income. It is actually need not be shown. It has to be reduced from the expense because they would have incurred such expense to complete the work to the customers also. Okay, this is there. We have to go into detail. Sometimes what will happen, the terminology what is used here may not exactly reflect what they are saying. So we have to go through notes in detail. All these things will be there. Okay, now coming to other income, unspent liabilities no longer required return back. Okay, interest income. Sorry, first interest income is there on others. So 20,000 and 10,000. And unspent liabilities no longer required return back. So this is they would have completed 3 years of liability period. So there is no more, it is due. Nobody is claiming that money. So current year it is 0, but previous year it is 27,000 is there. And miscellaneous income, any other receipts are there. Okay. Now this is as far as income is concerned. Now coming to net increase in inventories of work in progress and finished and developed units. Okay, now because this is a construction company, they had given as developed units, finished developed units like that. If it is a manufacturing company, they would have given as a product. Okay, now project work in progress, they have taken opening less closing, difference is 14,000. Okay. Now finished stock of developed units. See, there is work in progress, there is finished goods. There may be raw materials also, but maybe they are not procuring the material directly. Contractor would be procuring like steel, cement, bricks, all these things. So maybe they would have given as a lump sum contract. So not lump sum, as a contract, turnkey contract. So they are showing only these two aspects. There is no raw material aspect. If there is any raw material like steel purchase, which they are holding it as stock in trade, okay, or any other equipments, then it will that point also will come. Okay. Now this net increase in inventories of work in progress and finished goods. See, opening balance is 86 lakhs and less closing work in progress is 1 crore 1 lakh. So 14 lakh value of work has been increased during the year. Okay, this is net of sales. Please remember, this is net of sales. Now, finished goods. Same way, opening was this much, closing was this much. So total, if you see total inventory, work in progress and finished goods, it is negative 10 lakh 81,881. It means what? See, during the year, whatever they have incurred additionally, okay, is transferred to work in progress, net figure. Suppose if you leave finished goods, it is in positive, you may not get doubt. If you see in work in progress, it is in negative. Okay, sir, we are talking about expense and why we are saying negative? Yeah, because see, 14 lakh value has been increased during the year. Okay, opening minus closing, this is the increase in work in progress. So this much cost I am transferring from the current year expense to inventories, that is balance sheet. Okay, you see here now construction cost. See, this is the 46 lakhs is incurred during the year. Okay, out of this 46 lakhs, I am transferring 10 lakh 81 net of both, I mean work in progress and finished goods. Out of 46 lakhs, whatever I have spent during the year, 10 lakhs I am transferring to work in progress inventories, that is to balance sheet. Balance 36 lakhs I am indirectly debiting to P&L. Okay, if you see this schedule or note 3.2 minus 10 lakhs and 3.21 46 lakhs. If you go back and see the P&L, you see here now 10 lakhs is negative, 46 lakhs, 21 is positive. So net of this figure only is getting debited to P&L. This figure 10 lakh 81 is getting transferred to work in progress inventory, because this 10 lakhs has come as a difference between opening and closing, right? That 10 lakhs is nothing but difference between opening and closing. That means you have already transferred 10 lakhs from this 46 lakhs, but the disclosure is like this. That's all. There is no other meaning to it. Please let me know if you are finding any ambiguity there. Yeah. So this is construction cost which incurred during the year. Out of this cost, net of opening, closing of finished goods and work in progress, this is getting transferred to work in progress of inventories. That's the reason we are taking this figure. See, you see total 46 lakhs we have spent. There is a certain cost which is shifted from construction cost to inventories, closing inventory. That is the reason this net figure is going to P&L. Okay. Now coming to next schedule. You see here employee benefits expense. We have discussed this. Various aspects have to be shown here. And here again you see less transfer to construction work in progress. That means total employee cost of 6 lakh 59. 1 lakh 61 is shifted to work in progress. Okay, that is why it is reduced, and 4 lakh 98 only is taken to P&L. Okay, same way finance cost. I have told you that you have to draw the cash flow. You have to identify where such money is being used, whether it is used in the product or whether it is used in the indirect expense, that is overheads. So they have identified out of 8 lakh 37 total borrowing cost, 1 lakh 93 is transferred to work in progress. Balance they have debited to P&L. Same way, if you see here, other expenses transferred to construction work in progress 6 lakhs 42. Out of the total other expenses, 6 lakhs 42 has been transferred to work in progress. Okay, all these are getting added to the inventory cost, okay, or construction cost, and subsequently it is going to net figure is going to inventories, that is closing inventories, and payment to auditors. Okay. Now earning per share, fine. One more thing I want to show, this contingent liabilities and commitments. Income tax not acknowledged as debt and disputed by the company. Okay, there is some demand which is not acknowledged. Okay, and securities mortgage by the company. Next, claims against the company not acknowledged as debts. Okay, somebody would have made some claims in RERA or something like that, but they have not recorded it as a liability. Okay, fine. And here securities, they have mortgaged it, some securities. So if the to a related party, okay, suppose if that party don't pay, then it will become their liability. So it has been shown as a contingent liability. Okay. Details of properties mortgaged. Okay, they have given those mortgage details also. Next, related party disclosures, segment information. You see here, we were discussing about micro small. You see here, we have relied upon the information provided by the management in this regard. Accordingly, based on the information records available with the management, that means they didn't maintain the bifurcation of MSMED. That's why it is shown as 0. Understand? Okay, this is the note. If we are saying like this, based upon the management would have told there are no MSMED, then that's all, finished. Then when I was telling you about the MSMED in balance sheet part, I told you you can make the tabular form. Okay, this is the sorry. tabular form for various points. How much beginning of the year, what is the outstanding and what is the interest, how much has been paid, how much has been paid after the due date. All this reporting is required as per MSME Act, and the same thing has been reflected here. Okay, they have made the tabulation, but because they don't have any data, it is all 0, 0. Next, employee benefits. Fine, that's all. Okay, and I don't think there is any other important point here. 14%. Ratios, this is ratios as per the balance sheet. These are all again balance sheet notes actually. Okay, and this is the general clause saying that wherever it is required, we have shifted the groupings of the numbers. Okay, of preceding year, previous years. Suppose if in any expense in previous year you have taken in miscellaneous expenses you have taken 3-4 items, and this time you felt the amount is huge and you have shifted from miscellaneous expense to separate line item, then even in the previous figure also you are removing that and showing it separately. So this is the general clause which has to be maintained. All these changes will get impacted by this clause. We can say that we have told that we have shifted the groupings of the or summation of various items in the balance sheet like that. Okay. So this company division 1 schedule 3 we have completed. Okay. Now I will quickly go to balance sheet where I said I will show you impairment. Okay. Impairment I will show. Then I thought today we will start with LLP, but anyway, I don't want to rush. Let me complete this impairment and then we will start this one in the next class, LLP balance sheet. Okay. See here, if you see here, see same format is maintained here, and here profit for the period from discontinuing operations, schedule 33. Okay, in schedule 33, if you see, okay, this balance sheet I have prepared. That's why I'm telling you. This schedule 33, if you see, this figure breakup is given in the same fashion as like this in schedule. Okay. And the tax expense, we have given the tax expense of that, how much tax will apply for 238 rupees in lakhs. You see here, it is rupees in lakhs. Okay. So whatever the rupees in lakhs is there, what is the tax amount? Okay. Same way, if you see in balance sheet also, because as of that particular year, that business was not sold. It was only just agreed. We were awaiting for the NCLT order. Okay. If you see here in balance sheet, assets held for sale. Equity, assets, property, tangible net investments, advances, deferred tax, notice. That is yes, one point. See, as per accounting standard, it is not to be shown on the face of the balance sheet. I will next class. It is we are running with the time. In next class, first I will show you that schedule where I thought I copied only this balance sheet and P&L. So right now I'm not able to show. Okay. Like in profit and loss statement. In case of asset held for sale should not be shown on the face of the balance sheet. It has to be shown only in the notes to accounts. That is the reason it is not showed here. Okay, I will show you the schedule in next class. Okay, so we will complete with today's class, and next class we will start with LLP once I show you that schedule. Okay. Let me know if you have any doubts. Otherwise, we will conclude the class. And I'll be sharing schedule division 3 queries, questionnaire. Just try, please do it. Okay. Thank you. Thank you.
Yeah. Sure. Video.